Hello, I'm Kevin Conlon, principal and co-founder of Meridian Pacific Properties. As the COVID crisis continues, I thought it would be appropriate to provide you with both our near-term and longer-term view of the situation and how it is affecting investment real estate in Memphis as of April 7th. COVID has been both a health and an economic threat on an unprecedented scale in modern times. While much of the recent news in the U.S. has been dismal, we are starting to see the first evidence that the infection rates have begun to fall. Our government has implemented a number of programs aimed at bridging the economy through the crisis. These programs will help investment real estate in particular. The crisis seems to be very regional in terms of its impact. The areas that have high-density housing and large populations in the service and hospitality sectors, such as New York and New Orleans, have been strongly affected. I observe that the low-income tenant demographic has had the most economic difficulty as they have had greater exposure to the service industry and struggle with interruptions to their income. With respect to our tenants in Memphis, the COVID crisis has not been as great thus far. As of April 6th, we collected 89.2% of the rents owed, which is actually somewhat higher than normal for the sixth day of a month. We have had fewer than 15 tenants apply for a rent deferral, or less than 2% of the total number of tenants. Our leasing team reports that rental activity remains seasonally strong. Retail and investment sales have been continuing. I believe there are four main reasons for these positive results. First, the Memphis economy has higher than average employment in the logistics and medical industries, which have been less impacted by COVID and lower exposure to the service sector. Therefore, more tenants have retained their ability to pay rent. Second, we specialize in Class A properties, which have higher than average rents and require tenants to have higher incomes to be able to rent them. Our tenants are generally employed outside of the service and hospitality sectors of the economy, so they have been less impacted by COVID. Third, our property management company uses more aggressive underwriting criteria than average before we accept applicants to become tenants. Our tenants have much more solid jobs and are more responsible about managing their finances. Finally, we have been proactive in making tenants aware of the programs available to them that will assist them in the short term, such as the government stimulus payments and expanded unemployment benefits. These payments help our tenants pay their rent. Time will tell how the COVID pandemic will truly play out in the coming weeks, but the initial results for our investors and tenants are relatively good under the circumstances. I expect that over time we will begin to see more stability in the financial markets and a material boost in employment. Interest rates are low and should stay stable or decline somewhat, which will support housing prices and improve cash yields for investors. For our part, we will continue to monitor the developments and manage the changes as they occur. Right now, we are optimistic enough to continue our new construction operations unabated, as we believe Memphis remains an excellent market for real estate investment. As a nation, I believe we have taken the essential steps that were needed and have the will to overcome our adversity. I'll continue to send you regular updates. Please stay safe. Thank you.